CrowdStrike stock is up 60% in the last year. It was $517 in July, then crashed nearly 20%. Here's the question: is CrowdStrike still the king of cybersecurity, or is the market beginning to lose faith? Because on the surface, this looks like one of the most unstoppable companies in tech. Its Falcon platform protects businesses before the hackers even break in. It's pulling in over $1.1 billion in quarterly revenue with recurring contracts that lock in customers for years. And now, CrowdStrike, they're betting big on Charlotte AI, the upgrade that could turn Falcon from a digital bodyguard into a full-blown cyber army. But this is the problem, right? Despite record revenues, CrowdStrike is still posting losses, and spending is rising fast. Worse, last year's global outage left airlines, hospitals, and retailers offline for days. Delta alone blamed CrowdStrike for $500 million in damages. That's the kind of black eye that doesn't exactly heal quickly. And Wall Street, they know it. The stock trades at 26 times its sales, way above its peers, which means one slip, one bad quarter, and this stock could tank hard. So today, I'm breaking it all down. The growth that keeps CrowdStrike ahead of the hackers, the risks that could blow up its momentum, and of course, whether or not this stock still deserves your money, or maybe if it's time to look elsewhere. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. I think that's a good thing because it means I'm not here to sell you hype. I break down the numbers so retail investors can make smarter, more confident decisions with your money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. All right, so let's get into CrowdStrike. CrowdStrike Holdings is a leader in the cybersecurity space. The company is based in Austin, Texas, and today they're essentially the cyber sheriff of the Wild West, right? Keeping hackers out of other people's businesses. And this is the hook, right? In today's digital Wild West, CrowdStrike isn't just another sheriff. It's gunning to be the marshal of the entire frontier. Their main product is the Falcon platform, which specializes in cloud-native protection solutions, acting as a sort of digital bodyguard. By leveraging machine learning in threat detection and response capabilities, CrowdStrike is able to act efficiently and preemptively. So instead of reacting when something happens, Falcon uses AI and a whole lot of data to spot the hackers before they get in. And that's important because in cybersecurity, prevention is always cheaper than the cleanup. And that's exactly why Falcon's proactive edge matters. CrowdStrike continues to expand beyond its standard endpoint protection, deploying new cyber defense technologies that cover cloud security, identity protection, and security operations. And they're winning awards for doing so. Overall, CrowdStrike's recurring revenue model and high retention rate keep it very relevant. And their continued innovation with AI-powered cybersecurity keeps watch on the front lines of digital defense. But even the best bodyguards can slip up. So let's have a look at the stock. Because the stock price, well, let me tell you, things have been very interesting recently. After a couple of months of downtrending, after reaching $517.98 back on July 3rd, today, CrowdStrike is trading around $423. If we take a step back, we can see that the stock is up 60% over the last 52 weeks, while year-to-date performance is still decent at 24%. But the stock's been showing weakness in the short term, especially around its 1- and 3-month performance metrics. So here's the question, right? Long-term investors are smiling, but short-term traders, very nervous. which side is right? Because something has been going on. Maybe some profit taking, maybe something else. Let's have a look at what the numbers say. CrowdStrike's second quarter fiscal 2026 revenue came in at $1.17 billion, grew 21% year over year, exceeding the $1.15 billion guidance last quarter. Now, annual recurring revenue, or ARR, grew 20%, reaching $4.66 billion, a new record for the company. So on the surface, that should be enough to drive investors into a frenzy. But if we look closer, we see a few cracks that's starting to pop out. First, and most notable, is that despite the top-line growth, the quarter still ended at a loss of 31 cents a share on a GAAP basis. CrowdStrike blames the loss on an increase in stock-based compensation, higher operating expenses, and continuing legal and admin fees from the massive CrowdStrike outage back on July 19th last year. And here's the real issue, right? Those losses, they're not one-offs. They've been stacking up. There's been a consistent increase in net losses over the last few quarters. Top line and recurring revenue growth is great and all, but CrowdStrike needs to rein in spending. It's not the end of the world, but increasing losses could overshadow its growth story. So here's a quick takeaway. Wall Street loves growth, but hates it when that growth comes with ballooning expenses. So what could sustain CrowdStrike's growth? Well, this is where things get really interesting, because I would say it's CrowdStrike's secret weapon, Charlotte AI. Charlotte is built directly into the Falcon defense platform, making security faster, smarter, and more automated for more customers while reducing the cost of sourcing tools for each mode of defense. Using Charlotte is essentially like sending your digital bodyguard to Secret Service training and supplying them with a tank. That's how CrowdStrike breaks out of just endpoint protection and storms into identity protection and cloud defense, the biggest battlegrounds in today's cybersecurity market. With both identity protection and cloud defense having massive addressable markets, CrowdStrike is opening itself to an incredible opportunity to reach an even wider customer base. Now, make no mistake, identity security alone could also be a game changer right here. CrowdStrike has access to potentially billions of dollars worth of addressable market in identity security, which can enhance their cross-selling capabilities and strengthen their subscription channels. Though revenue for this segment I would call still embryonic, the key signal here is rising multi-module usage among their existing customers. And this is a question that comes up on my Discord channel, right? Are we just at the start of a massive run, or are we already priced for perfection? Because the part that investors don't like to hear, even a cybersecurity powerhouse like CrowdStrike, they're not bulletproof. So let's step into the danger zone for a moment and have a look at the risks. First up, the nightmare outage from last year and its repercussions. Now, if you've been following the story, in July of 2024, there was a buggy update that crashed millions of Windows systems worldwide. And this triggered a chain reaction of airlines, hospitals, retail, and media operators scrambling to combat operational chaos without network systems. And Delta, well, they alone cited more than $500 million of damages, dragging CrowdStrike into legal battles and a regulatory heat. A big mess like this leaves a mark, right? And now that clients are aware of just how much damage a problematic update can do, well, CrowdStrike's reputation took a bit of a hit. Now, yes, the company has been doing its best to regain that lost trust, but it cannot afford similar accidents. Should another massive outage happen on their watch, competitors, they're going to swoop right in. And that's not the only landmine the company's been facing. CrowdStrike is also under review by the DOJ and the SEC for accepting a $32 million channel deal, but not delivering the products. On top of that, the stock has gotten more expensive compared to their current earnings, leaving some analysts asking themselves whether investors are paying too much today for future growth. Currently, CrowdStrike is trading with a 26 price to sales ratio. And that means that investors are buying the stock and paying 26 times more than the company's per share revenue. In comparison, its competitors like Qualys or Varonis, well, they're trading at 8 and 12 times respectively. Such a steep multiple also means any slowdown in revenue could trigger a sharp correction in the stock. So you could say that today, CrowdStrike is priced for perfection. And in investing, perfection rarely lasts. So after all the wins and all the risks, where does CrowdStrike really stand today? I think CrowdStrike is at the center of one of the fastest growing industries in tech today. The company continues to post strong revenue growth, and its Falcon platform, well, keeps setting the pace in cybersecurity. Its identity theft protection and AI-driven solutions position them as long-term leaders in protecting enterprises against cyber threats, even as those threats evolve with technology. However, widening net losses and the looming threat of regulatory scrutiny, well, it can move markets as much as earnings. So overall, I think CrowdStrike has plenty of upside, but I don't think this is a stock for the risk adverse. I think it's for investors who want exposure to one of the most innovative cybersecurity firms, one that's scaling fast towards consistent profitability. But the real test is going to come out on its next earnings report. Will the company meet its guidance in Q3? Because they're expecting quite a big turnaround in their bottom line. If they can do that, I think the stock could rally hard. Well, we shall see, right? But what about you? Are you buying into CrowdStrike's growth story, or are you waiting on the sidelines until the risks play out? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe so others can find it as well. Thank you so much for watching, and I'll see you next time.